Hey guys, good afternoon and welcome to Your Stocks. I'm Pavitra. With me is Ekta. For the market, of course, we are seeing a down day led by IT. But all is not lost, right? I mean, you have a 160-point cut on the Nifty, but there are definitely pockets of this market which are holding up. The Nifty Bank has moved into the green, by the way. The PSU Bank Index is doing well, but a lot of the private banks, names like ICICI, Kotak, off the lows, and they are seeing, that positive move up on the Nifty Bank as well. So that is definitely holding up quite well. And the broader market also faring a lot better, with the mid-cap index down just around 0.2% and the small-cap index actually well in the green. So even on this major IT down day, there are pockets that are holding up.
Hi, Pavitra. Yes, absolutely. It's a recovery of around 80 odd points for the Nifty that we've seen. And yes, barring IT, I think the market is quite enthused with what we are seeing in the broader markets, considering that the mid-cap index has picked up around 18% on a year-to-date basis already. And we have the Nifty Bank, like you mentioned, has turned into the green. So there's been quite an intraday reversal that we've seen in these financial stocks. And in fact, 70 points higher currently for the Nifty Bank. Remember, tomorrow is going to be an extremely important day in terms of numbers for the entire banking space. We have ICICI Bank, we have Kotak Mahindra Bank, Yes Bank, AU Small Finance, as well as RBL. So that's really going to set the tone in terms of what we can expect in trade on Monday, along with Reliance's numbers, which are post-markets today. So a lot to watch out for, and I'm sure we have a lot of queries this afternoon to give us a sense in terms of what what retail investors are thinking. So joining us today, we have Ruchit Jain, lead of research at 5paisa.com, and Astha Jain, research analyst at Hem Securities, to answer all of your stock queries. Astha as well as Ruchit, welcome to the show. Well, let's start with the first question. We have Meenakshi, who writes to us from Kerala. She holds 9 shares of Divi's Lab, which she's bought at around 4,417 rupees. So she's sitting on a bit of a loss there. She's bought shares of JK Paper also, which is at 416.75, as well as Hindalco at 483, and 25 shares of TCS at 3,762. So this is basically her portfolio, which is diversified across sectors. She's a long-term investor, wants to know what to do, what are the future prospects of these investments as well. Astha, ladies first, let's start with you. What's your perspective on this?
Okay, good afternoon to both of you. So talking about, first of all, I will take the query of JK Paper. So JK Paper has posted their highest ever revenue in the year gone by, that is FY23. In fact, they have done 2 acquisitions also in the corrugated packaging. So I think all these things, whatever acquisitions they were doing, I think that now that will be acting as a growth driver for the company. In fact, the demand is very strong. So I think JK Paper is really sitting on the high growth opportunities going ahead, and that's why I recommend a hold on this stock. So from our side, JK Paper is a hold, and the price target can be maintained somewhere at around 350 to 370 levels. So this is about JK Paper. Now the second question is about the Divi's Lab. So what happened in the Divi's Lab is that they have done, some of their custom synthesis projects now. One of them is already being commercialized, and second is also got the qualifications. So I think this project, which has already been commercialized, I think now the benefits we will be seeing in coming quarter of this, and that's why we are a little bit positive on the results which will be coming now. Talking about their raw material prices also, so we have seen the softening in the raw material prices, so that will also be helping company in improving the margins. But the price at which the company, stock has been bought is quite high. So near term is looking strong, but I think 4,400 or 4,500, at the 4,400 level, he has bought the stock. So it will take really a long time to reach those levels. But initially 4,100 can be set as a price target. Another query was about Hindalco, if I'm not wrong. So it was about Hindalco?
Well, yes, Hindalco at 483 and TCS at 3762.
So talking about TCS, first of all, TCS is looking decent to us, although the way we have seen the Infosys has shown performance today, so that can act as a dampener on the industry for, initially sometimes, but in the longer run, TCS will drive on its own performance. So the quarterly numbers were not that great, but the deal wins were high, and now they're focusing on the newer technologies like generative AI, 5G, etc., metaverse. So I think all these are virtual reality, so that can act as a growth driver to the company. And in fact, the order book is strong. It is around 1.4x of book to bill. So I think this is also looking decent, but we can see the prices can climb in the near longer term. In the near term, maybe some volatility can be seen. So hold is recommended for this stock also. Price target can be set at around 3,700 rupees in the longer term. And talking about Hindalco may be the results which will be coming for the Q1 of FY24, where we can see some sort of pressure on the copper smelter margin, because the copper smelter they are into was shut due to the maintenance. And that's why, and in fact, they have started this in the mid-June only. So maybe Q1 FY24 results will show some sort of dent on the margins regarding this segment, but the other segments are working good for the company. And I mean, in fact, the past results were also good. Company was able to maintain good volumes as well as margins. So I think Hindalco is also a hold from my side.
Okay, got that, Astha. Thanks a lot for taking us through that entire review of these stocks. Ruchit, coming to you as well, take us through how these are looking on the charts. You have Divi's Lab, JK Paper, Hindalco and TCS.
Yes, hi, very good afternoon to everyone. Well, I'll start with the large cap name. That is TCS first. Well, what we have seen after the quarterly results during last quarter, I think the large cap IT names went into some consolidation phase post Infosys results during last quarter. But still they seem to be are in a time-wise corrective phase. Though globally also the IT stocks have witnessed a good recovery. But what we feel that the TCS, Infosys, the price-wise corrective phase is much more behind them now. So we don't expect any much downside from current levels, but they are going through some time-wise corrective phase where some consolidation could be seen in short to medium term. So if the view is for very short term, then do not expect any much up moves from here. But less, since the price-wise corrective phase is done, I think so if one can keep a long-term horizon, then definitely should continue to hold on the stock from a long-term perspective. Divi's Lab is looking positive. Well, a high top, high bottom structure technically has been seen in the stock. The price volume action is also good, where price up moves have been supported by good volumes in last couple of months. So we are expecting targets around 3900 positionally. So I would recommend to continue to hold on and just take a review again around 3900. It will be very crucial to see the volume action around those levels. Hindalco, I would again suggest to hold on. Primarily, the dollar index is going down and it's around 100 now. And the falling dollar index is usually always positive for the metals in the metal stocks. And the aluminum especially, I think if you look at the base metal prices as well, then aluminum has started recovering from the recent swing lows. So I think the downside from the aluminum stock seems to be limited, and both Hindalco as well as Nalco are looking good technically as well. So we can expect first targets around 450 followed by 470. So at least for a targets of 470, I would recommend to continue hold on Hindalco. Now, JK Paper is the only stock within this list where the trend is negative technically, because you can see that last 2 or 3 months when most of the mid caps or the large cap stocks also have seen a good run up, the paper stocks have not shown any kind of strength. So there is a relative underperformance in paper stocks compared to the market movement. But these are cyclical names. When we see that the pullback comes, the pullback moves are equally sharper. The stock is trading around its support of 300. So I think he should wait for a pullback move towards 343 for 350. And on the pullback move around 350, just take a review whether it should exit out there or not.
Okay, all right. Well, that's the view coming in on a whole host of stocks. We do have the HDFC Life numbers on your screen where the profit has come in better than expectations. So 416.7 odd crores versus our expectation of around 408 odd crores is what is reported by the insurance company. So that's the only number that we have on our screen as of now. But overall, Astha, just wanted a comment with regards to HDFC Life. We're waiting by for the details. But nonetheless, we just have the profit figure with us. It seems to be better than expectations. Just on this figure, any thoughts as well as your overall view on the stock?
So whatever view I will be giving, it will be like a prima facie view, because prima facie what we are seeing is that results are looking good. So for HDFC Life, yes, we were also expecting as a research house a strong set of numbers for this counter, but really details need to be seen. So initially I want to reserve my comments. I will comment after I'm seeing the results in the detail only.
Okay, well, in any case, we're still expected to see a new business premium, which is expected to see healthy growth. So we will wait by for that. And there is a margin expansion of around 40 basis points on a year-on-year basis, which is expected to come through. So we'll wait by for the HDFC Life numbers. As of now, we just have the profit, which is a little better than expectations.
Okay, the stock has actually done quite well, right? This year, it's, I mean, if you look at it on a year-to-date basis, it's up over 23-24%. So stock has done well ahead of its numbers. Also, I think for the past month, it's up around 4% or so. But anyway, we'll get back to the numbers when we do have some more details. In the meantime, let's get back to our queries. Shravan writes to us from Telangana. He holds 100 shares of Nykaa, which he bought at 245. He says he's a medium-term investor and wants to know whether to buy or, whether to buy more in order to average out the price, or should she, get out of this. Coming to you, Astha, on this one, the buy price is, well above where we're at on Nykaa. Nykaa is currently around 144, 145 rupees. Considering that this is a medium-term kind of investor, what would you suggest? They're willing to buy more to average as well.
So right now, I will not recommend to buy more because I think we really need to see how the results will be going ahead. What is concerning right now is the fashion segment is not working that good because they are facing intense competition. Although the other segments like BPC segment is working good for the company, and in fact they have done some customer engagement programs also. So their customer expansion program is also on the cards right now. So I think all these things will give results, but in the longer term, because these whatever steps they are taking will increase their offline as well as online growth also. But some segments are we really need to see how they will work out in case of high competition we see. So I think Nykaa is a hold from my side. A new buy is not recommended, and the price target can be set at around rupees 175 because the cost price is really high. So I think it will take another 6 months to a year to achieve those levels at which the share has been bought. But initially 175 can be set as a price target and a hold is recommended.
Okay, all right, Ruchit, what would your view be? Astha is recommending a hold on Nykaa, and that buy price will probably be achieved in the next 6 months to a year. So the horizon to hold the stock to get to those levels could be quite a while. So what would you recommend?
So frankly, not much trended move which we have seen in the stock. Post listing, we witnessed very sharp correction, and off late some pullback moves have been seen, but there's no consistency in the volumes along with the price up move. So which does not give much confidence of any significant up move coming in the short to medium term. Technically as well, 165, 170 would be the major resistance in case of any up move from here on, and 135 is a good support for the short term.
Okay, got that. Let's get into our next query as well. We have Subramaniam who writes to us from Bengaluru. Now, he holds 101 shares of VIP, bought at an average price of 612. Says he's a medium-term investor and can hold for around 6 months to 1 year only. He wants to know whether he should hold or sell this one. So, VIP bought at 612. It's currently at 595 and willing to hold for around 6 months to 1 year. Sir, do you think this one, it makes sense to hold for this kind of time period?
Yes, sure. In fact, what I believe that 615 to 645 to 650 levels can be seen at the initial stages only. So a long-term target can be much higher, provided that the company continue to perform well, which they have shown in the past also. So talking about this particular counter, what is working, in the favor of companies that, in fact, they have operations in India as well as Bangladesh. So they are totally an integrated player, and where the other peers have to depend on the import, this company is doing all the operations as they are an integrated player. So this is working in favor of the company. And another point which I feel is working in the favor of company is the, again, softening of the raw material prices, because their raw material is a crude derivative only, and we have seen that crude prices have fall sharply in the last few months. So this is again can be a growth driver for the company, and they can show strong set of numbers going ahead. So definitely a hold is recommended. At the initial level, 645 can be set as a price target, but in the long term, price targets can be higher from here.
Okay, all right. So that's the view coming in on VIP. We need to take a quick break, but stay tuned. We'll be answering a lot more queries on the other side. Welcome back. You're still tuned into your stocks. We have Ruchit Jain as well as Astha Jain to answer all of your stock queries this afternoon. Well, let's get to another question. But before we get to that, I just want to point out a couple of stocks. We have Havells, which is down around 4.5%. It's at the low point of the day. There was margin disappointment which came through this quarter for the company, though the revenues were okay. But I just want to point out that maybe it was the commentary from the management also, which was a bit cautious about demand. And they are seeing a little bit of soft rural demand. So that's probably weighed on the stock a little bit. And Coforge, which was managing to hold up in the IT space for most of the trading session, that stock too has slipped around 3.5%. So at the low point of the day for Coforge. So as you can see, that stock too sluggish. More details with regards to HDFC Life, where the total APE has come in at around 2,328 odd crores, and more details which are flashing on your screen. Let's get to another query then. We have V. Balakrishnan, who writes to us from Chennai. He holds 80 shares of Voltas, which is bought at an average price of around 1,100 rupees. Since more than a year, he wants to know what to do, whether or he should hold or sell at these current prices. He's currently sitting on a loss. Well, Ruchit, what would you recommend on Voltas?
I think the stock has already seen a significant price-wise corrective phase. And if you look at some recent past, then even in January 2023, the stock witnessed good support around that 750 mark. So I think the downside seems to be very limited from here on. So these are not the prices where one should think of exiting from the stock. So 750, 745 would be a good support range for the stock. And in case if we see any kind of pullback move from there on, then in short to medium term, we can expect a pullback again towards 850 kind of level. So hold on to the stock for a pullback. Even if you want, you can look for averaging some stocks around 750 because the risk reward ratio would become much favorable to take some contra trades over there.
Okay, Astha, what are your thoughts on Voltas? Because the current price is well below, the buy price of around 1,100. Do you think you should get out of this one or stay for a bit?
So here the time horizon matters. If the time horizon is more than 6 months, then he can hold a stock, because I think the coming quarter will not be that great. Because what happened, we have seen some unseasonal showers, so that will dampen the demand of this company, and they have seen the pressures in their room AC segment also. So I think the Q1 FY24 will not that be very strong for this company. So maybe it will take another 6 months to show good performance. So here the time horizon, if it is more than 6 months, then a hold is recommended. Although my price target matches with Ruchit's, it's 865, which we are setting the price target for this company as of now.
Okay, got that. Let's get on to our next query as well. Keshan writes to us from Mumbai. He holds some shares of Deepak Fertilizers, which he bought at an average price of around 1,063. So the stock has, almost half from those levels. He says he's a long-term investor, so he's willing to stay invested and wants to know whether he should hold or sell. Ruchit, thoughts on Deepak Fertilizers? Like I was pointing out, he's sitting on quite a loss on this one.
Buying price is too high, but no, I think again I have similar view as I said in Voltas, that these are not the prices where one should look to exit from the stock, because already the price-wise corrective phase, the price-wise damage has been done. So of late we have seen that the stock has now entered some time-wise corrective phase. So the short-term consolidation could be there, but once this consolidation phase is over, then we would see some retracement of the recent correction. So I think that should lead to some pullback moves. So if we can keep a time horizon of about 6 to 9 months, then I would recommend to continue to hold on any kind of pullback moves, then look to exit from the stock where the loss is narrow.
Okay, all right, Ruchit, as well as Astha, we're going to leave it on that note. Thanks very much for joining in and giving us all of your answers to all the queries that we have. Well, the VNB margins for HDFC Life seem to have disappointed, and that seems to be weighing on the stock. So the expectations were 27%, it's come in at around 26%, and in the previous quarter, they had done around 29%. Even if you compare it to Q1 of FY23, that on a year-on-year basis, it's stable, but versus expectations and versus last quarter, it is lower. So that's on HDFC Life. As you can see, the stock is down around 1.5%. That's all the time that we have on the show, but do remember to email us all of your queries and we'll address them with our experts. Stay tuned for Closing Bell up next.